Hey everyone, Leanne Pilkington with you, and I have got a special guest today from our Kredi Home Loans partnership. Oktay, how are you?
I'm well, thank you. How are you?
Yeah, going really well. So tell me, why would I use a mortgage broker rather than just go to my bank and get a loan that way?
So banks only offer their own product, whereas a mortgage broker's got access to 40 different lenders.
Okay.
So we can do all the legwork in finding you the best deal.
Okay, and the best deal isn't necessarily the cheapest interest rate, right?
That's exactly right.
Yeah.
So the lowest rate may not be the best option for many of our customers. We look at things like fees, offset accounts, flexibility around the loan and the account and what they can deal with. So paying it off sooner, all those things are things we consider when we're making recommendations for a loan.
Okay, and you mentioned an offset account. That's different to a redraw, isn't it?
Yes.
Okay, so can you explain the difference?
Yes, so an offset account is a separate account that's attached to your loan.
Right.
But it's also like a transaction account. So you can put money in and out of that account without
And so what's the benefit of having it offset against your mortgage?
Well, every time there's money in your offset account, it acts as if that money has been paid off your loan.
Right.
So the interest is calculated on the balance between the two.
Yeah,
So
okay.
essentially, if you've just got your salary going into your offset account, the moment that money hits your account, it's offsetting your loan as if your salary is paid off your loan. But you've still got access to that money.
Okay, and a redraw account?
A redraw account is extra payments into your loan.
Yep.
So essentially, it's money that you've got to redraw back out of that loan account.
Okay.
And some lenders have limitations of being able to draw that money back out.
Yeah,
so we always recommend using an offset account so you can control your money.
Yeah, because you can do with it what you will.
Exactly. And you can even take money out of an ATM in an offset account, but you can't do that with your redraw.
With your redraw.
Yeah.
And when you how often should you actually review a loan?
Well, we review our customers' loans every 6 months.
Yep.
But it could also mean when there's a significant change to your life. If you're basically getting married or, if you're having children or you're going overseas, you should be reviewing your loan to see if it's set up correctly for that change. But essentially, if you're not doing any of that, 6 months at a minimum.
Yeah, 'cause I know I didn't review my loan for decades. And I went into the bank and they actually gave me a significant amount off just because I asked, right?
Yeah.
So they always have better deals available for new customers, which drives me nuts. An existing customer, you can ask for a better deal, though.
Yes. And as a mortgage broker, we also play the banks off each other as well. So we might say, we've got a better deal for you with another lender, and we ask your existing lender to match that rate.
Yeah.
So, and they usually come to the party.
Yeah, okay, good to know. So first home buyers, there's a lot going on for first home buyers, isn't there?
Yes.
What kind of, firstly, what are some tips you can give first home buyers that are saving for their deposit?
So there's a grant, the First Home Loan Super Saver Scheme, where you can save your deposit using your super.
Okay, how does that work?
And you can, basically you salary sacrifice your income into your super. So you get tax benefits, and you can save up to $50,000 in your super account, and you then use that money as your deposit to buy a property. So there's that.
And so when you say you can salary sacrifice and you get a tax benefit, does it mean that you're getting taxed at 15%, not your normal rate of tax?
Yes.
Okay. And you can take 50 grand out of your super account.
Well, you can save 50,000. Yeah, you can't use the money within your super already. You can save up.
It's the extra, the extra money. Yes. Got it. Okay, that's a really good tip for first home buyers. So.
Yeah, essentially, it's a way of saving and taking advantage of the tax, like I said, but also you get a benefit in the super fund because you get a return on that money.
On that money as well. Yeah.
And you can't access it, so it's not like a savings account that's linked to internet banking. So if you're at the shops, you can't say, "Hey,
exactly,
and buy this thing."
Yeah, no, that's a really good tip. Government grants for first home buyers change all the time.
Yes.
How do people stay on top of what they are?
There's some federal government grants and there's local government grants. So they all have websites so you can access. But essentially, we've never seen this many grants before for first home buyers. So it's a really great tool to get into the market.
Yep.
We've got grants that waive stamp duty.
Big one.
There's $10,000 grants for brand new properties.
Right.
There's grants for single parents that are looking to get into the market.
Yeah, right.
There's grants for borrowing 95% without paying mortgage insurance.
Oh, wow. Okay.
Essentially, you can, put a couple of those together and really take advantage of the grants that get into the market a lot.
Very significant.
Yeah.
And I know the banks look really closely, particularly for first home buyers, at their spending habits. So if you're saving for a home, what else, other than putting the money away, what else should you be doing?
So I don't know how far we should go into this. I always say keep a separate account for your general expenses. Because the banks will look at your statements and maybe keep another account for any of the other expenses that may not be ideal for a first home buyer.
Like Uber Eats. Netflix,
gym memberships. Look, all these things are things that people use, but too much of it is,
the banks can be a bit judgmental on the spending.
Exactly.
Yeah.
Okay. So gambling is a very big one. We see gambling a lot.
You would?
Yeah, because it comes out of accounts now. It's not cash at the TAB.
Yeah.
It's sports bet accounts linked to your savings.
Whereas I just used to see $100 from Castle Hill RSL. $100, and it's like, hold on a minute.
Yeah.
I know what's going on here.
But now it says sports bet.
Yeah, right. And first home buyers, now sometimes, I know when we first bought our house, Mum and Dad went guarantor for us. Why do people choose to get a guarantor?
Buying a property with a guarantor is like the most ideal option in buying your first home. Because essentially it allows you to get into the market without having to save any money. 20% deposit is the preconceived idea that you have to save. And, if you're talking $1.6 million average purchase prices, 20% is
it's a lot of money.
Yeah, it's a lot of money that people can't save these days. So you can essentially buy a $1.6 million property with zero savings.
Really? And the bank would lend it to you if you had the money, if you obviously had the income?
Obviously the income and serviceability is a big thing there. And we also, when we do guarantor loans, we speak to guarantors and get an understanding that they're able to understand what they're getting themselves into, and ensuring that the borrowers are not going in over their heads as well. So serviceability and budgeting is a really big thing for us. Yeah,
okay. So that whole 20% deposit is not necessarily required if you've got someone who's prepared to go guarantor.
Yes, and even just a 5% deposit. So essentially you could, if you had no deposit today, you could buy a property with a guarantor. And guarantors are typically your immediate family, grandparents, parents, cousins,
not aunties, okay? Not aunties.
All right, I was just about to say aunties and uncles, but I'll take that back.
Exactly, please do.
And siblings. So, but essentially how it works is the bank will allow you to borrow 100% of the purchase price. They will link 20% of the loan to the guarantor's property,
right,
and 80% of the loan to your property that you're buying. The risks are minimal, especially in Sydney with prices
the way they are.
The way they are. Typically, on average, we have 2 to 3 years where the guarantor's still on the loan, and we're able to get them off. And the way you do that is we essentially either pay down the loan or the value of the property goes up.
To that 20%.
That's right.
Yeah, right. Okay. And let's talk about investment properties.
Yes.
I've obviously just bought an investment property. My husband was kind enough to go guarantee for me. God love him. What do people need to look out for with investment loans at the moment?
Investment loans, there's a way of structuring your investment loan where it could actually be really beneficial for you, i.e. interest only, splitting up the loans and so forth. So I'd really seek advice around setting up the loan structure and ensuring that it's the most tax beneficial.
Yeah, fit for purpose.
Fit for purpose. And also buying an investment is also a significant cost. So essentially buying the right investment property is another factor that I would recommend. So essentially not just buying a property for the sake of buying
it.
You want to do some research around the property you're buying.
Yeah, absolutely.
Because it's no longer an emotional decision. It's not a decision, I want to live in this suburb. It's more of an investment decision. So I would look at it as a business.
Exactly, yeah. A lot of people don't like to buy investments outside of the area where they live, which is not necessarily great advice, right?
No, not at all.
And super funds. It was quite popular to buy property in your super fund back a few years ago. How easy or not is it to buy property inside a super fund these days?
It's still easy. What's happened is a lot of the major banks have pulled out of that space.
Right.
But a lot of smaller lenders have picked it up.
Okay.
So, in obtaining a loan is easy, actually easier than what it was before. But essentially, anyone that looks to buy their super fund should get professional advice, because what was happening before, a lot of people were buying in their super fund and not having advice around that. But I'd recommend getting advice around whether you should buy a property in super.
Yep.
And if the advice is correct and it's fit for purpose, then
Go for it.
Yeah, getting the loan is not a hard challenge.
I know you helped us refinance our property in super and saved us about 3% on our interest rate, which was just incredible. So that's an indication of a bank wanting to get out of that space, right? They put the fees up so that their clients exit.
But a lot of the smaller lenders are doing it really well at the moment, and we're seeing rates of around 6%, so almost like a home loan rate.
Yeah, okay, good to know. Yeah. Is there anything else that our viewers should be aware of that a mortgage broker can help with?
There's plenty. I'm just trying to think.
Put you on the spot.
I guess for anyone that's watching, like, speaking to a mortgage broker could save you thousands of dollars. And also, you don't have the time to review 40 different lenders, whereas that's our job. That's what we do for all our clients. So going to a mortgage broker essentially means that you're getting the best deal. And you're also getting the best terms, because we also negotiate the terms, i.e. interest rate and so forth with the lender.
And what does it cost you?
The borrower, nothing.
Nothing. So why not just speak to a broker and get the advice in the first place?
We get paid by the banks.
Yeah.
And it doesn't cost you anything. And we also, at Kredi, we build a long-term relationship.
Yeah.
So we don't just set the loan up and we disappear. We keep in touch. We review our loans.
Yeah.
And that could save you
money over time. Okay, beautiful. Thank you so much for being with us.
Thank you. Thanks for having me.